Hi guys, welcome back to my channel. If you guys are new here, my name is Mel, and please go ahead and hit the subscribe button, like this video, share, comment down below. Today I'm going to be discussing how to create a stock watch list, why it's important, and the 5 criteria that I use to make this list. So with all that being said, let's go ahead and get into the video. Okay, so I'm typically a swing trader, meaning that I get into a stock and I'm holding a stock for days, weeks, months, however long it typically takes to reach my take profit level. But in this video, I'm going to show you the 5 metrics that I've used to create my watch list. And I've been pretty much trading the same stocks for about 3 years. Okay, so this is what I used 3 years ago to set my watch list up. So the first criteria that I started with is I wanted to trade stocks that I was interested in. And this is important because, like I mentioned, when you set up your stock watch list on Yahoo Finance, you're going to get alerts about the stocks. So a lot of my stocks are dealing in tech. I trade Chipotle, I trade Ulta, and this is because these are things that I actually want to read up about. These are things that interest me. And it doesn't necessarily mean that it's required for you to trade stocks that you're interested in, but it makes it a little bit easier, and it makes you want to actually stay in the know about your stock versus if you had no interest in the stock. So like for me, I don't care anything about like tractors, so I don't trade John Deere, and it's just because I'm just not interested in it. It doesn't mean that it's not a good stock to trade. That's just not something I'm interested in. And then from there, I go into the sectors and I see which stock in the sector of the stock that I chose is outperforming. So by this, I mean there are 11 sectors that are in the stock market. So you can go onto Yahoo Finance and you can go to the sector of the stock that you've chosen, and then you could see which stock is outperforming in that sector, and you may want to go for that stock versus the stock that you initially chose. And if you chose a certain stock, 9 times out of 10, you're still going to be interested in maybe a stock that outperforms in that same sector, because typically each sector groups stocks that are pretty much the same. They do the same type of thing. So like, for example, Target and Walmart are in the same sector, so they're consumer staples. So if you just say, for example, like Target, you're a Target girl, I'm a Target girl. But if you chose Target and you went onto Yahoo Finance and you looked up the consumer staples sector, you will probably find that Walmart has actually outperformed Target. And this is important because you may see that if you were to trade Walmart over Target, you may notice, bigger gains, because typically Walmart goes up more in price than Target. And it's not to say, once again, don't trade Target. I'm just giving you some insight on ways that you can maximize your profits. All right, criteria number 2, only choose 5 to 10 stocks to trade. And I say only 5 to 10, especially as a beginner, because you don't want to overload yourself and overwhelm yourself by trying to follow too many stocks at one time. If you start putting 20, 30, 40 stocks on one watch list, you're going to miss something, and you're going to be wondering why your stock price is going against you. And then you're going to be looking, trying to search after the fact, and then you're going to be like, oh God, I didn't see this. And it's probably because you're overwhelming yourself and you're overloading your watch list. So a good rule of thumb, in my opinion, is about 5 to 10. Most people say 10, but if you're a beginner, 5 might be good for you when you're first starting out, and you can just kind of start adding as you get used to following the news on your stock. All right, criteria number 3 is I only trade mega cap and large cap stocks. And what I mean by that is a mega cap company is a company that has a market capitalization of $200 billion or more, and a large cap company is a company that has a market cap of 10 billion or more. So you may be wondering, what do I mean by market cap? If you're new to investing or new to trading, the market capitalization of a company is the stock price times shares outstanding of a company. And the reason why I like this is because when you have a really large company, it's really hard to see a significant decline or increase in stock price. And so some people prefer penny stocks because of these large price movements that could potentially happen, but you could go in the wrong direction with these large price movements. So mega cap and large cap companies provide more stabilization, and that's why I prefer to trade mega cap and large cap companies. It's very unlikely that you will wake up the next morning if you're in a trade and you will see a 15 or 20% drawdown in a mega cap company, because there's so much money piled into the company that it takes a large order for a gap down or even a gap up in price. So yeah, you may be more likely to see huge gains in a penny stock, for example, but there's also, for me, increased risk, and this is why I prefer a mega cap or a large cap stock. So criteria number 4 is volume. And by volume, I mean, how liquid is the stock? How many people are buying and selling this stock? I like the number of 2 million or more. And if you want to know, how do I find out how many shares or how much volume is in a stock that you're trading, you can go into Yahoo Finance and you can go down on the summary page typically, or the overview page, and it'll tell you the average volume. And so think about it like this. If you don't have a lot of people buying and selling a stock, if you were in a stock and you had a lot of shares, well, you have to have somebody on the other end of the transaction to get out of the trade. So if, just say the market was going up and you were making money, but a lot of people don't typically trade this stock, you may be in a situation where you can't get out when you want to, and that's for me the definition of stuck holding the bag. Like, if you have to make sure you're trading stocks that are liquid, meaning that you have money flowing in, you have money flowing out, and it's happening at a pretty fast pace. So look for stocks that have a volume of at least 2 million or more. All right, guys, so we made it to our last criteria number 5 for picking a watch list, and that is an average true range of at least $2. Okay, so you may be wondering, what is the average true range? So the average true range, or ATR, is an indicator. It can be found on pretty much any trading platform, Thinkorswim, TradeStation, you name it. I'm sure they probably have ATR, but it tells you on average how much a stock price is moving. So I like at least $2 or more. Some people say less, some people say more, but I like to at least start out with $2 or more. And this is why. So let's just say, for example, if you have a stock that has an ATR of $2, right? And let's just say the stock price is at $100 to make it easy. So if you have 100 shares of that stock, and on average it moves up $2. So if it went from $100 to 102 and you have 100 shares, well, you already made $200. So think about what you could do with that. You could, pay bills, you pay power bills, you could pay light bills, buy groceries. Even though they're super expensive, they probably gonna cost you $200, but that's a $200 extra that you made in the stock market. And that's why, for me, the average true range is super important when it comes to building your watch list. Okay, so all right, so let's do a quick recap of building a watch list. And this is me as a swing trader. This is what has worked for me over the years. So the first thing is, I chose companies or stocks that I was actually interested in. So always start with what you're interested in, so you'll want to know, keep up with the news about your company or your stock, and actually be interested in what you're researching and looking at every day. The second thing is, pick a 5 to 10 stock watch list. You don't want to overwhelm yourself by putting too many things on a list. The third criteria for me is large cap, mega cap stocks, and that's only because they provide a little bit more stability versus like your penny stocks would when it comes to swing trading. The fourth thing that you want to take into consideration is volume, because you want to make sure you have another person on the other end of the transaction. And the fifth thing is the average true range. You want to make sure your stock is actually going up in price. All right, guys, that is all that I have for you today. I pray that this video was helpful and that you were able to take some of the things that I said and you can apply it to picking or creating a watch list, especially if you are a new trader or investor. Please go ahead and hit the like button, subscribe button if you have not already. Comment down below. Let me know of any topics that you want to hear about. If you want me to go a little bit deeper in, showing you how I add stocks to my watch list, whether it be like on Yahoo Finance or my trading platform. And yeah, I'll see you guys next time.